In April 2026, that's when HMRC is going to be coming after a large number of you. They're going to ask you to submit an additional 4 reports a year. Now, these digital submissions will achieve basically nothing except create opportunity for more fines. This is making tax digital for income tax. It's coming, it's confirmed. Now, I'm going to help you understand exactly why they're really doing this. And it's certainly not about helping small businesses at all. So making tax digital for income tax, or MTD-ITSA, if you want the acronym soup. If you're a sole trader or a landlord with gross income over 50,000, starting in April 2026, you're going to be forced to submit quarterly reports of your income and expenses through MTD compatible software. Eventually, they want everyone in this system. But here's what really matters. This was first announced back in 2015. That's a full decade ago. Originally planned for 2020, and then that got delayed because of the big COVID. Then in 2024, it was delayed again. Now, April 2026, they've had 10 years to hear the feedback from whoever. It could be accountants, could be business owners, from you. 10 years of consultations, pilot schemes, professional bodies saying this is going to be a disaster for small businesses, and they're still pushing ahead with it. So let's talk about what MTD actually does, and more importantly, what it doesn't do. Because it doesn't reduce your tax bill. Your tax bill will remain exactly the same. It doesn't change when you pay. You still need to pay your tax by January the 31st. So it doesn't really give you any benefit other than force you to report 4 times a year instead of once. That's every quarter, but you still need to do that full self-assessment at the end of the year anyway. So you're doing more work for no benefit, and the government does say it will help you to stay on top of your bookkeeping, so it's good for you. Digital transformation. Now that's a load of rubbish. The self-assessment system works. It's worked for decades. And the whole point of being self-employed, or being a sole trader, is around flexibility. You run your business, you keep track of your things in a way that works for you. And then once a year, with nearly 10 months from the end of that tax year, you can sit down and you can get it done. You or an accountant or someone else can file your return. And this is why it's different from being a limited company. That level of flexibility is what makes the sole trader model viable for millions of people. Now, let me just throw a couple of numbers at you here for context. Out of 11.5 million people who filed self-assessments in January 2025, just under 750,000 filed on deadline day itself, with just under 32,000 filing between 11 p.m. and midnight. So that leaves an estimated 1.1 million or so missed deadline completely. And what does that tell you about some human behavior there? People do struggle with one annual deadline. Life gets in the way when you're a sole trader, when you're self-employed. You're busy running your actual business. You're dealing with customers, you're trying to earn money. Now, if you imagine those same people having to hit deadlines 4 times a year, every quarter without fail. And this is where the real agenda is. Penalties. If you're even 1 day late, that's £100 minimum. It doesn't matter if you don't owe tax. It doesn't matter if your profit is 12,000 and you're barely scraping by. If you miss that deadline, that's £100 gone. If you miss it by 3 months, that's daily penalties of £10 up to £900. 6 months late, that's another 5% tax due, or £300, whichever is greater. And these penalties apply whether you owe 0 tax, and you could be well under your personal tax allowance, you could owe nothing, but you've missed a quarterly submission. That's that £100 penalty right there, just for an admin failure. Now you see what's happening here. This isn't about tax collection, it's about penalty revenue. HMRC knows exactly what they're doing. They've got a decade of data showing that people do struggle with deadlines. We all know this anyway. They know that if 1.1 million or so people miss the annual deadline, we can just do basic maths there and go, well, times that by 4. And you're looking at millions of charges every single year in penalties. And that's the real revenue generator. It's not tax, it's fines. So now let's talk about who this really affects, because the government is framing this as it's targeting high earners. It's only if you earn over 50,000, that's decent income. No, that's rubbish. That's turnover, not profit. Now, turnover is before you take off costs. And for sole traders, for self-employed people, costs can be quite large. So let me give you some numbers here. Between 2015 and 2025, the average sole trader profit in the UK was between 21,000 and 28,000. Now, that's not a lot. 60% of sole traders make less than 10,000 profit. Now, let's think about that. 6 in 10 people running their own businesses are making less than 10 grand a year in actual profit after costs. And yet, if your turnover, your total sales before expenses hits just 50,000, you're getting dragged into this MTD system. So let me just give you a hypothetical here. Let's just say we've got a decorator and their turnover is 55,000, which sounds okay on the face of it. But then you've got to take away your materials, your van costs, insurance, tools, equipment. Maybe you rent a small storage unit. Maybe you've got your phone. You've got an accountant as well. You could easily be close to half of that being expenses. So let's just say, your profit before tax is 30,000. After tax, you're going to be taking home, closer to around about 26, 27,000. That's what you live on. So you're not rich. It's okay for several areas in the country. It's not okay in other areas in the country. But come April 2026, you're going to be doing those quarterly MTD submissions. That's admin time. That's time that you could be spent actually working. So you might actually need to forcibly now, if you didn't have one, hire an accountant or someone to manage this for you. And that's going to eat into your profit. Now, if you're doing this yourself and you do forget, then you've got to add in those fees we've been talking about. And this is all just taking away from you as a sole trader. You're the business. You have family commitments. You have all of these things that you have to contend with. The last thing that you need is more admin, and it's only going to cost you. This isn't targeting the wealthy. This is just targeting normal working people that are barely getting by. Let's talk about what quarterly reporting actually means in practice, because currently a lot of sole traders will do one of two things. They might keep basic records throughout the year. That's receipts, maybe in a folder, bank statements, a simple spreadsheet, or potentially have some kind of tool. But at the end of the year, they might sit down for a couple of days, maybe up to a week, and go for everything. They might get someone to do this, right? But they will file that self-assessment one way or another. And it's not perfect, but it does work. It works because you can do it in one concentrated effort when you have the time. You might get it done early, you might get it done in December, you might leave it to the last minute when, work's actually quieter. But MTD does change everything, because now you need that MTD compatible software. So you can't just use your spreadsheet. You have to have some kind of bridging software to push it into HMRC systems. So, you're looking, let's take the two big ones. You've got Xero and QuickBooks. They're great softwares, but those subscriptions cost money, and that's creeping up. And a lot of people just don't need that, especially if your margins are low. Every quarter, you need to make sure that all your income is recorded digitally. You need to make sure that all your expenses are categorized digitally. You need to submit a summary to HMRC through the software, and you need to do this by the 7th of each month after every quarter ends. So let's just say the quarter ends the 5th of July, you've got until the 7th of August. And that's 4 times a year without fail. And really, the worst part about this is that at the end of the tax year, you still have to do that final self-assessment. And that's where you finalize everything. So you can make any adjustments, claim reliefs, then you file your normal self-assessment. So you're not replacing one return with 4. You're just adding 4 quarterly submissions on top of that, but you're still doing the same thing. So 5 submissions instead of 1 for the exact same tax bill. Now, I've spoken to sole traders who do their own self-assessment every January. They spend a couple of days doing it, maybe a long weekend. They sort through the paperwork, they work out the numbers, file it, and it's done. These people now are going to be forced to either spend a couple of days every quarter, it's even a day or whatever the time is, making sure they keep on top of it. They might hire an accountant, and we've spoken to so many people in this predicament, because a lot of people just don't like the numbers. They just don't get involved with it. They're busy doing what they should be doing, running their business. Now, if your turnover, let's say, is 30,000, you're making 12,000 profit, can you afford that extra money? Let's say it's an extra £800 or £1,500 a year for fees when you've got software accountancy fees. That's digging into your profit margin just for compliance. And if you try and do it yourself, let's say, and you do struggle with this, you're going to be losing those days, that time that you cannot commit to it. And also, if you're relying on yourself and let's say you forget about it, you're going to be having those fines stack up, and that is bringing nothing but stress. Now, here's where it gets really interesting, because MTD doesn't exist in isolation. There is a pattern here, and you kind of need to understand it, because the government's got this 50 billion fiscal hole. They've promised not to raise income tax, national insurance rates, or VAT on working people. So where's that money coming from? Well, they can't raise the tax rates. So, the options that are obvious, there's, two things they can do. They can increase compliance and penalties to extract more from the existing system, or they can expand the base of people that are paying tax to get, more tax coming in. And that's where MTD does come in, because more reporting means more opportunity for those penalties. But there is potentially another piece of this puzzle. There is speculation, and I want to be really clear, this isn't confirmed policy as of yet, but it's been leaked to the press and proposed by think tanks that the government is going to be considering in its upcoming budget slashing the VAT threshold. Now, the VAT threshold currently sits at 90,000. Some proposals suggest dropping it to 30,000. That's the Resolution Foundation's number. They reckon it could raise 2 billion a year. Now, why am I mentioning this when, we're here talking about this new MTD? Because if you look at the pattern, it makes sense. MTD thresholds, 50,000 in 2026, and 30,000 in 27, and then down to 20,000 in 28. Speculated VAT threshold could drop to 50,000 or 30,000. And that alignment with the MTD threshold there, you can kind of make that connection. They're conditioning you. And if you're already doing MTD submissions, well, quarterly VAT returns aren't that much extra. They're not, because it's the same kind of period, how it works. You've already got the software, you're already doing the digital record keeping. You might as well just register for VAT too, right? And if both these thresholds align, let's say you get the 30,000 or the 50,000, suddenly you're hit with both at once. Now, I'm not saying this will happen, but you've got to think about it and why they'd want it as well. Because the problem for small traders currently is, lots of people will deliberately keep their turnover under 90,000 to avoid VAT, because your customers are just regular people. They're homeowners, consumers. They cannot reclaim VAT. So if you charge them 20% more, they can go elsewhere. The Office for Budget Responsibility reckons that around 44,000 businesses deliberately limit their turnover to avoid crossing that VAT threshold. That's 350 million in lost economic activity. People literally turning down work. Now, the government's view, these businesses are artificially suppressing their growth. If we lower the threshold dramatically, there's no point in staying under it. Everyone's VAT registered. Everyone's on a level playing field. Businesses can grow. But the reality here is that if the threshold drops to 30,000 and you're a sole trader at the moment serving customers, you've got kind of three choices here. You will have to raise your prices by 20% or lose customers, or you absorb that VAT and it will kill your margins that already aren't that high. And some people will just go, let's shut down, because you're then competing with those larger corporations where they've been VAT registered for a long time. They've got greater economies of scales that you just cannot match. So let's just say that local carpenter who's always been cheaper than the bigger kind of firms out there, now that they have to charge VAT, their prices are very similar, but you're competing with companies that have got 50 employees, bulk buying power. So what does this do? He's got no choice. He has to give up. He has to get a job with that big firm and go into PAYE. And that could even be the possible real agenda here. So humor me here and let's explore this. Because if you start forcing sole traders into employment, into PAYE, make being self-employed so administratively burdensome and difficult to make money, financially it's just unviable and stressful and penalty-ridden. People will just stop. They'll be disencouraged to kind of start businesses. So they might just start looking at employment. And why would HMRC want lots of people in employment? Well, think about PAYE. It's automatic. Tax gets deducted at source every single month before you even see that money. They don't need to wait until January the 31st. They don't need to chase people for returns. They don't need to worry about quarterly submissions or penalties. It just happens. More people in PAYE means more regular, predictable tax revenue, less enforcement needed, lower admin costs for HMRC, and more control over the tax base. And who benefits when sole traders shut down? Big corporations. Small traders who, used to have the competitive advantage because lower overheads, more personal service, have flexibility, and often no VAT. If you take those advantages away through the compliance costs and potentially this VAT registration by lowering the thresholds, then you're just competing against organisations that are 10 times your size. And that certainly isn't a fair fight. And here's the big thing. The government will claim that they're supporting small businesses and encouraging growth. While they're doing this, they say that MTD helps you stay organised. And if your VAT threshold drops, it removes distortions and creates a level playing field. Now, we all know that's just a spin. The real outcome is fairly obvious to anyone that does actually run a small business. You're going to be squeezed out of the market. So let's zoom out and take a look at what this does for the economy, because there's 4.38 million self-employed people in this country. Eventually, most of them will be in this MTD. That's millions of people spending more time on compliance, less time actually working, more fees, whether it be, through software, accountancy fees, more stress, more penalties that are going to be here for a lot of people, because there's going to be a lot that do inevitably miss those deadlines. And what happens when millions of small businesses have less money, less time? They will invest less, they will hire less. And when small businesses struggle and do close, their customers will pay more, because now they're going to have to deal with those bigger companies that do have larger overheads. If the VAT threshold drops on top of this, and again, speculation, but if it affects, that's going to affect what? It's going to affect a lot of business decisions. Costs could rise even more, and that's inflationary. We've already got some of the worst inflation in the G7. The Bank of England does keep interest rates high to combat it. There's mortgages that stay expensive, business loans stay expensive, and it's kind of vicious cycle. You add in all these higher compliance costs, higher prices, higher interest rates, lower growth, and when the economy struggles, who gets blamed? It's always global factors, the previous government, Brexit, anything except the policies that have been created and are creating the problem. So what to do now? How can you survive this? First, you need to understand where you are with MTD, because this is confirmed and it is happening. So if you're a sole trader or a landlord, you can check your turnover between 24-25 period. If it's over 50K, you're in the MTD from 2026. If it's over 30, then you're going to be in it from 2027. If it's over 20, you'll be in it from April 2028. So you need to run your numbers and understand what it actually means for you. Now, you need to take in account things like, the time you spend on admin for those quarterly submissions, things like software costs, which could creep up between 150, 300 quid maybe. You've got to think about accountancy fees. If you're going to turn to an accountant, someone like ourselves, that could be anywhere from 500 or up to 1,500 potentially. And then you've got to buffer for potential penalties for those people that, you do know that you are likely to miss deadlines, or you have let's say, a history of it. The second thing is incorporation. Now, for a lot of people, becoming a limited company might make more sense. The compliance burden is already there with things like Companies House, but you get different tax treatment and potentially it's more flexible. It's not right for everyone, and incorporation does have its own kind of costs. If you're making decent profit though, it certainly is worth exploring, because there are other, again, options for restructuring. Some sole traders might think about partnership structures or other arrangements depending on the situation. But you do need to get most likely professional advice around this if you do think, okay, I'm not entirely sure what the best option is going forward. The important thing is getting your systems right. Start getting organized now, because you don't want to wait until 2026 in April and figure out the software there for record keeping, because there's going to be a learning curve anyway. So you need to start in 2025 now and make sure you get comfortable and understand, so you're not scrambling around. You need to plan for contingencies. What I've mentioned about the VAT threshold, we're going to find out sooner rather than later, and it is speculation, but you just need to have a bit more of an eye on going forward. Think about all the moving parts here to make sure you're not going to get stung. Understand how these things could affect your business model. And what you can do is you can get your voice heard. We've got a petition. We're fighting MTD because we believe it's fundamentally unfair on small businesses. The government needs to hear from all of you, 4.38 million self-employed people, that it's not acceptable. So you can sign that, we created it, share it, and make a noise. Because the thing is, HMRC and the Treasury are counting on you to accept this, as it's all inevitable. They're counting on you to just deal with it quietly while they collect this penalty revenue. And it doesn't have to be inevitable. Policy choices can be changed, but only if enough people push back. And even if MTD does go ahead as planned, the more pressure there is, the more likely that this system will be adapted. It will be better implemented. There'll be more generous exceptions. There'll be lower penalties, and there'll be more support for small businesses, because silence will get you nothing. Now, on the basis that MTD does go ahead, we have got our MTD Survival guide that we've created now for some time. It's regularly being updated, which gives you a lot of information around it. And like I say, we do update it regularly just to make sure you're in the know and you have something that you can always reference as we get closer to the time. And those people that, inevitably are going to be finding out late when it's kind of landed on their doorstep, it gives them kind of a good point of reference to bring them up to speed. You can download it, it's free, the link is in the description. So I think the one thing here that isn't debatable is, something needs to happen because public finances need to be fixed. There is a fiscal hole and difficult choices need to be made. But it does feel like it's always coming from the same people. It's never the, the mega corporations that are fueling money offshore. It's never the ultra wealthy with those clever structures. It's always you, the self-employed, the sole traders, just the small business owners. These are people that just can't afford tax lawyers. They can't, just restructure their assets. People just working hard to make a decent living here in the UK. And the government knows all of this. They know that MTD will generate penalty revenue from people that are going to struggle with these quarterly deadlines. And when it comes to the VAT threshold speculation, maybe it happens, maybe it doesn't. But it doesn't really matter for the fundamental point that the war on kind of small businesses, it is real, and MTD is planned to go ahead, and it's their confirmed weapon at the moment. So you can sign the petition, the link below, to try and stop this. Download our survival guide in preparation for this. And just share this video or any of the other videos that we've got, trying to help people out. Because whether you know someone who's, a small business owner, a freelancer, self-employed, whatever it is, a landlord, it's important that they understand as much as they can before these things come into place. And what I want you to do is I want you to comment below. Just tell me how this affects you, whether it affects you or someone, what your plans are. Are you just going to kind of suck it up? Are you planning on restructuring, going to incorporate a company? Just let me know, because I'm really interested to hear directly from you. I speak to lots of people every day. And so a lot of kind of what I'm talking about is direct feedback from all the sole traders that I speak to anyway. But I want to know exactly how you're thinking as well.